Okay, you see this thing I'm about to teach now. Please pay attention to it. It will help you. It will help you in this manner. It will help you to be able to identify a long-term trend. You know what I mean? It will help you to identify a long-term trend. This is me. I'm actually at home. My light is not too bright. I'm so sorry about that. But my audio is very clear, right? So it will help you to identify a long-term trend. So please, I want you to be very, very sensitive and pay attention to what I'm trying to show you. So with this fundamental analysis now, we'll be talking about how to compare the economic strength of currencies using the economy of their country. It's easy because as you can see now, I'm using ChatGPT and other AI to make the notes so that it could be easier for you. You can even make the research by yourself. But the advantage you have with me is that somebody with experience is the one doing it. So there's a little bit of insight you get from me, how to apply them. Yeah, so now, the problem facing a lot of traders is to know the trend. It's always the problem. But if you are into Forex trading, focusing on Forex, so these are the basic things that is most importantly for you to know. It will help you to position your trend to a particular area where you make a very good amount of profit. So now, I have already made my introduction. Currency value are influenced by a mix of economic and political factors. Now, look at here. Comparing economies helps traders to spot a stronger currency for trading advantage, to compare the economy. So these are one of the things that some basic trader doesn't really pay attention to. So that's why I told you this class is going to be different from what we've been doing on fundamental analysis and stuff like that. So we're going to discuss how to compare different economy. I don't know whether you've been with us, when I told you guys that for you to understand forex trading, like currency trading, you need to compare each of the economy first, because the strength of the economy determines the strength of the currency. Were you with us then?
I think maybe I watched a replay video or something where you mentioned that.
But you also know that some of the young traders, because they don't understand economic realities, they only focus on fundamental technical analysis. If you go to their training centers, they talk about technical analysis. They'll be able to understand how to read those candles and focus on it. An indicator. I'm not saying they're not making money. They're also making money, but it's good to be advanced in anything you are doing. So now the issue is how to compare those economic analysis or economic strength. So this note make it easier for us how to do it, how to compare economic strength between countries. Then, because of the economic strength comparison, we review the currency trend. Then it will also analyze the core indicators across countries to identify strong versus weak economies. So weak economies. So now look at what the weak economies means. It's also referring to weaker currency. Now, one of the things we look out for is interest rate differentials. The interest rate, what we have done about it before. We also talk about financial analysis, we talk about interest rate, blah, 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 but we're talking about how to compare them. Yeah. So of course, higher interest rate will attract foreign investors, but lower interest rate helps the lower economy, or the domestic economy. It helps them. So a country that has more of internal production level will focus strongly more on lowering the interest rate so that their internal economic activities will be boosted and their currency will be very much stronger too as well. Unless country that leverage their economic strength on foreign direct investment, they of course will try to increase the interest rate to make sure foreign investors can invest into their country and get high return. So compare it, for example, from central bank, like globally. For example, what this is talking about is this. Let's say now we're using euro and dollar. We can only, that's what we want to trade on. We only compare their rate. What is the European bank interest rate? That is objective now. I'm passing information. The objective now, we talk about what is the European bank interest rate. What is the European bank interest rate? And what is the United States this interest rate as well? Now, look at the example. Higher US rate than Japanese US rate, for example, we give a strong dollar. But that one does not mean we should go and buy or sell. We should go and buy US JPY. Only that. We should go and buy it. No. So we have to compare more of other realities to arrive at a conclusion, which I will still show you as I progress. I don't know if this class is making sense. I just want to make sure you are following what I'm saying.
Yes, sir.
Now, we need to talk about inflation. All of us know about it. If you check the previous video, it's there. But how do I apply it now? So you know that consumer price index, which is the CPI, is the major thing. If you want to trade Forex, is the major thing that you can use to compare the inflation. How does the consumers buy the product, or how do they spend their money? Now, low inflation, of course, will make the currency to be stable, and the higher one can cause problem on the currency. Now, similar thing with GDP, the growth rate of that country GDP is also another thing that we can use to compare. So we can compare the quarterly or annual GDP across different countries. But for example, now let's say you want to navigate to Asian market, focusing on JPY. We try to compare GDP of JPY. All this is will help you, as I said earlier, to identify trend, not short time. In fact, as I keep going on, you will see the point where I'm making, because there's a point I started asking, making more research. Or if this is the case, why do we have maybe a long-term buy for 1 week, or a long-term sell for 1 week or 2 weeks on a particular currency? Then you will see the answer. This business is actually sweet for those who understood it very well. Now look at the example. Of course, you know that strong GDP can make the currency to be strong. So you could not ask yourself, let's say you want to trade on euro and dollar. You can ask, what is the GDP growth of euro? And what is the GDP growth or strength of dollar? Similar thing when you are trading maybe Chinese yuan and US dollar. You try to compare both GDP and automatically, or you can compare them with another weaker currency, maybe New Zealand, something, because it's always good if you're a trader to be trading extremely strong currency versus extremely weaker currency. That when you're trading two strong currencies at a similar time, you may not maximize their returns, even if you have some economic fact about them. Now, look at the example is giving us here. Fast-growing economy attract Forex demand. Sure, because when the GDP is strong, it's a sign of economic growth, and it will have attract this thing, demand. We know about unemployment rate, which we talk about non-farm payroll and the job creation across different countries. Now, low unemployment will be a head economy because of many people have jobs. Less people that doesn't have a job, so people are busy doing something. Now we can compare the non-farm payroll with the U.S. labor stats, because of the U.S. labor statistics. Sorry, the Eurozone labor statistics talks about the number of people that get jobs. Please take note, because we will not practicalize all of them. So if you could now go on your Google and search what is the European labor statistics, what is the current employment zone, rate within the Eurozone. We already know what is the employment zone, the employment rate within the United States. 247,000 jobs were added last week. So we could also say the previous of what was 137,000 jobs also was added. So we could see that the US economy is actually growing healthy. And now we'll not compare within the Eurozone. At the end, we'll get a figure to be able to arrive at a conclusion. This is how to apply them. This is how to apply them. So sometimes it could take you an hour or two, or even the whole day, to do your mathematics as a trader. Outline all these things and go and get their facts, like their figures, which I will give example here before we end this presentation. Then we now talk about trade balance, which is also very common, or currency account. You know that exporters with trade surplus tend to have a strong currencies. And we can only compare the trade balance like Germany, which is trade surplus with the UK. And now that is when you want to navigate to a currencies like Euro, JBP. And then if you don't want to trade on cross currency, you can also use the same comparison with other normal major currency pair that you want to trade by comparing their distance. But remember what I said, you will not use one factor, you use cumulative factors. Like this thing we're talking about now come with figure, which I will show you in my next presentation. It come with figure, maybe you could say what is trade balance, let's say 4%, or what is the unemployment rate, maybe 2%. What is this one? 3%. Then on the euro, what is their trade balance? Maybe 5%. Or what is the unemployment rate? 1%. What is it? So at the end of the day, we can be able to accumulatively come out with a conclusive figure, determining the currency that is the economy that is stronger and the one that is weaker. This will help us to be on a better side when we are trading, to make a very good trading decisions, knowing the best place to place trades. Even when the chart does not look like it, you could be able to spot out opportunities because of what you have been able to analyze. And these figures does not lie, but they represent the actual economic realities of any of the currencies you are trading, or any of the economy that you are trading their currencies. I don't know if I'm communicating. Then we also talk about political stability and governance, so which is not majorly concerned, but you can also talk about it like, what Donald Trump did when Donald Trump came into power. The economic policies should not make the dollar to gain strength. When the world discovered that it's not really gaining strong this thing impact, then their currency began to go weak. Now they're also coming back again because of those trade policies and tariff that he's imposed on other countries. It's technically affecting those countries economically, and they're also trying to boost the US economy. These are political and instability or political policies. So stable government can attract good investors. One, use political stability and index and governance metrics. So political turmoil can also weaken currency, but it's not really a strong thing we consider on this basis of fundamental, because of most of the countries we are trading their currency does not have political instability. We trade majorly world-based currency pairs such as dollar, euro, pounds, Australian dollar, Canadian dollar, Japanese yen, and Chinese. So all these countries, they hardly go into war. It's under some other side of the world, like Middle East currencies, that will always be a problem because of a lot of political turmoil. But all these countries with trade their currencies is proven to be a bit stable, like the Western countries. The central bank policy tool, we did this thing, was it not on Monday? That we talk about this thing about dovish and hawkish. Can someone just confirm with me, please?
Well, yesterday now, yesterday, sir.
Yeah. So now,
Today, sir.
yeah. So now, what you will do here is that you compare. Let's say now you are using Euro USD, Euro and dollar, for example. So you check what is the US policy, and what is European policy. Remember, this is fundamental. If you are not careful, you will lose. Fundamental is all about presenting something. You will lose. So what you would do, like for example, you ask yourself a question: what is the central bank policy on euro? Which we cannot actually do here, but because of time, this is you can do it by yourself. But I just want to guide you how to do it. So you will know the policy, the interest rate policy, or the tone, whether the tone is hawkish, which is to rise the interest rate, or dovish. Now, you can compare the tone and action of major currency pair like the United States and the European Central Bank. This Fed is federal government, federal bank policy of United States. And this ECB means European Central Bank. Now, you can now go on public debt ratio, or what we call debt to GDP. So you can ask yourself, what is debt to GDP of a particular country we are using to analyze it? And of course, you know that low debt in any particular country will give a sign of strong economy. And the higher debt will, of course, cause inflation, just like what is happening in our own country. Then we also to consider foreign direct investment, but we have to compare, understand this course is all about comparison. All of this is anybody can talk about it, but how to apply them is the major problem or the major area we are here. We have to compare the both any of the currencies, and then we have to do this as an assignment. Maybe any one of us can go and do assignment to compare one or two currencies, economy structure and strength. Then we can talk about it tomorrow. So we can now be able to monitor a particular instrument to know whether it will act according to what we have analyzed. Then you see yourself becoming profitable. Then we'll talk about foreign direct investment. Then we also compare the flow. How does investment come into China? Assuming we're using China and US. Or how does investment come into Japanese? These are things that we can do. Then high FDI, of course, is also a very strong currency. For example, now, let's say on percentage, if you do this comparison, let's say US and Japanese, you see that more investment is flowing into Japan than foreign direct investment and than the US. It will be a sign that Japanese economy is going to be strong, which of course their currency is going to be strong. Remember what I said in the beginning, it's not only one. After the whole thing, we accumulate them and come out at a conclusive figure to decide which one is obviously on overall level stronger and which one is weak, because sometimes all of them will not be high on each other. So some of the factors, some of them can be low in figure, and some can be high in another figure. For example, you could have maybe a good interest rate here, and that may be 4%. The other one may be interest rate of 3%, and the other one may be GDP of 2.5. The other one may be GDP of 3.5. But at the end of the day, we can come out at a conclusive figure to decide which of the economy is stronger on each other. Then when you come to trading chart, it will help you to know if you want to be buying or selling more of that particular pair, and you have your strong reason. And believe me, you have chances of making more profit if you are following that a particular currency or a particular economy that is stronger than the other one. If you are following it for a long time, you make more profit. But remember, the market fluctuates. It's not that it will keep going one direction without fluctuating. So it could put back, but at the end of the day, you see that currency is going more bullish than bearish. That is the essence of fundamental. Fundamental will always drive the economy go one side, no matter how your technical analysis is talking about. Now, market sentiment may not play strong role in when you're talking about this thing and analysis. So now, this is another one, but most of us don't do it. The capital market performance, like trying to check how their stock market is performing, such as equity market, bond, and what the attraction is, the capital that they attract. Then you can now compare the yield spread of their stock index, and the positive capital flow can boost the economy. But this is not much necessary because of foreign direct investment. Most foreign direct investment come through the capital market. It does not come through the black market. People invest through the shares of those countries there. Like we believe that most of the fintech companies and tech companies in the US will rise because of the Trump policy. So most of the companies in the EU, we are considering investing on those companies by buying their shares, sending their money through those companies to buy the shares of the US tech companies and fintech companies. Until Donald Trump tariff war began to affect some of these companies, they are not performing as expected. Now, those things does not come through black market. It comes through their capital market. So foreign direct investment could serve as an alternative to this one. I don't know if I'm making sense or if I'm too fast. How many of you know about currency strength index?
DSY.
Mm.
I know about DSY and
This one.
yeah, the DSI and 10-year yield.
Mm. What do you know about it? Like we're talking about, this is US now. Yeah, this is US index.
Yes, the dollar now is getting more strength. As this
More
97.505. That means yesterday is like 96.
Sorry, I didn't hear you clearly, please.
By now, dollar is getting strength because now it's trading 97.504. Yesterday, it's like it was trading about 97.4 something. So it's getting like one 1% increase.
Oh, and if it passes this point, it will become blue or green. Yeah, here is like previous close. Like you see this line. If this thing shoot up here, go up like this, then this color, this thing will become green. And the index, remember, by 8th of July it was here, so there's a little bit drop down, which most likely gonna go up again. I don't know who understood this chart now, apart from Kelechi. Do you understood it, Helen and Co?
No, sir.
So this thing now we are watching now is not Forex chart. It's index of how dollar is performing. Like let me put on a candlestick, but it's not like like a currency pair. It's talking about a particular index of dollars. You can see dollar here. So now, so this is showing you how dollar is performing on its own. It's another fundamental you need to know. So you could see how it performed from here, go up to this point, then come down again, and also currently at this price. So it's showing you that it's kind of recovering, just like what's the name again? Kelechi said yesterday it was below 97.500, like it was below around 97,400, which is somewhere here. Now it has gone up. So I put it here on this particular sign. So this sign, anytime it crosses a pivot point, it will turn to green, show you obviously that it's actually going up. But one thing about it is that it's good to buy to invest in dollar, not to buy it. To invest in dollar when the index shows a bit down, so that it could invest more at a lower price and make more profit when it's rising. Who is here with me? Let me ask more question. Opeyemi, you are Elena. Okay, I think Gabriel have not joined fundamental class before. So do you understand that, Gabriel?
Yes, I'm getting it.
Okay. What of you, Anthony?
Hello.
Yeah, do you understand that too?
Yes.
Okay. In case any of you miss out, please, you always call my attention.
Okay.
So now, this currency index helps to measure relative performance of currencies, and it also an idea comparison, how to compare the economies. But let me show you the practical part of it on using the Google AI, because I went deeper to give a very key analysis on this. Please pay attention. Although this meeting is okay, I'll make it shorter so that you can always go and watch it more time. Now, here is just a breakdown of how you can compare the economic strength to determine the currency strength. One, we're talking about the gross domestic product. Then how it relates to currency strength. I said it before, so I don't want to go and repeat it, but let me just use one as an example. Like, for example, a consistently growing GDP indicates a healthy and expanding economy, which generally attract foreign investment when GDP of a country is growing. So it also increases demand for a country goods and services, and it also translates into increased demand for its currencies. Of course, strengthen the currency. Now, so we'll talk about GDP per capita, and which is often used for better cross-country comparison. But now, let me give you a very quick breakdown. You see it on the same thing is also on inflation, consumer price index, CPI, and the PPI, and how you can be able to compare them: low and stable inflation, and the high and volatile inflation. I've always explained it like low inflation is good for internal economy, and the high inflation is not good. So you see how this note or this AI was able to like translate this in more. The same thing we keep explaining there, but this is the area I'm going. For example, how we can compare it. Now, let's use Euro USD, for example, to compare the economic strength of Eurozone and the United States and determine which currency is stronger. So now what we need to do is that we look into key economic indicators, which I have said before, and recent trend, the recent one. You see, the recent one is we look out for, and keep in mind the strength. That's what I said. And also the relative and the influence by various factors at a given time. Now, with this AI now give me a comparison. For example, this is the current trend now. The United States GDP growth as of the last one, the last record was 2.8%. Then the projected GDP for this year is 2.15%. Is this year high or low compared to last year?
It's high.
So
Yes,
this is what you
okay.
take note of. I don't want to give you a lot of notes because I know that some of us don't have time to read all of them. So all these things, you just ask, either use AI to ask or get it on Google or get it from anywhere. You just know it in your mind. This year is 2.5%. So 2.15% against last year. Now, you come to the Eurozone, you see that last year was 0.1%, sorry, 0.9% to 1.1%. And what they're expecting this year is 1.1% to 1.6%. Are they expecting high or low?
Higher.
But now, look at what you have to pay attention to. Figure on here is 2.1. The figure here is 1.1. Remember, they're all higher, but not on the same figure. They're all talking about higher GDP, but not on the same figure. Then, when you come to the CPI, as of 2024, they're talking about 2.9%, 2.95%. That's the United States. When this 2025, they're talking about 2.5%. The inflation. So is it high or low?
That means
It's
lower.
low.
And the low inflation is good for their currency or for the economy. Now, the Eurozone is talking about last year was 2.4 to 2.6. Now they're talking about 2.1 to 2.4. Probably it's not really much because of their own is under this is under probability, like not probability. When something is like under, that's mathematical term I'm trying to remember. Like these people are more precise with what they want. These people will have a range. Like we want it between here and here. You know what I mean?
Yes.
So now you come to the interest rate, which is central bank policy. The United States maintain a relatively high interest rate range from for March 2024, which is 4.2%. If you have following NFP, you see that it's been around 4.2% and 4.5%. And this forecast suggests further rate cut, that they will reduce the interest rate this year. I think what came out last week was 4.1%. I think so, right? 4.1% came out. You guys have forgotten, but you can never forget your stop loss. Or the one that any money that you have lost, you won't forget that one. But you take profit, or you won't forget it, but you forget the reason why you place the trade. It happened to everyone, not including me. We're just trying to be better. Because these are what can help you no matter what. Sometimes you lose money not because you are wrong, because of the capital and the nature of the product. Okay. Sorry, was I on interest rate or unemployment? I was on unemployment, right?
Yeah.
Oh, no, sorry. I was on, I thought it's unemployment. I was going to Forex Factor to check unemployment. So we are on interest rate. So now the European Central Bank is about 3.2%, so 3.0%, which is a bit lower than the United States. Remember, higher interest rate attract investors, attract foreign investors more, while lower interest rate attracts more of boost local economy. So remember that one. Then the unemployment, November, as of that time, was 4.2%. Now this is 6.3%. It means that on Eurozone, the unemployment rate is higher than the United States. So that is how it can go on and on. And now we talk about the trade balance typically runs by deficit meaning. So the Eurozone generally has a more balanced trade position at the time, and at times can run a surplus particularly. So let me know whether there's a figure. There's no particular figure given in comparison on this one. But now this is for the sake of knowledge. Now, in conclusion here, you see that when comparing the economic strength to determine currency strength, the US has generally been stronger than the euro in recent time and widely expected to maintain the relative strength index into 2025, which is this year we already, although the magnitude of this difference can influence based on the specific data. So now, I wanted to get something clear. Like I do the same comparison with US and JPY. The same thing also come out that the United States is also very much stronger than the Japanese yen, which on the trading chart is kind of a correspond. Therefore, the US is currently and is expected to remain strong than Japanese yen. And when I check the chart, so we could support the analysis here more from what we read because of the nature of their chart. We've been buying this market, and if dollar is going to be strong, it means we have strong hope of rebound. But something happened on my analysis, and I check if you can remember on Euro USD, you will know that Euro USD has been on bullish for a long time. I said, okay. But now the Euro USD has been up for a long time. Why is it that if dollar is strong, if US economy is very strong, why is it that dollar have not dropped? Because for a couple of weeks now, the dollar has been up. So this is the answer. For a couple of weeks now, you see how the market just like went up. You see, this is a sign of Eurozone rebounding. However, we know a reason why the Eurozone went up. It was because of when Donald Trump put up those policies, the German government pumped 500 something million euro into the economy, and the France pumped. These two economies are the European strongest economy, just to hedge the economy. What they did is to hedge it. Understand? It's not that what they pump is the reality of the economy. So they hedge it, and that thing took advantage of euro. But no matter whatever thing, euro has gone up, and that's what they wanted to achieve. So I asked, okay, now since this is what we have, but for 4 weeks now, euro USD has been bullish. How does this correspond to this analysis? So now, these are the reason, the possible reason for recent bullish for last 4 weeks, shifting from central bank expectation, interest rate divergence now are narrowing. So the European Central Bank hawkish than expected. If market participants began to anticipate that the European Central Bank would be less aggressive in cutting interest rate or even signal a pause, then previous thought or that their rate cut might be shallow shallower than the Fed, this will make euro determine asset more attractive. Then another suggestion is the federal more of dovish than expected. Then, and the recent data of July, they said that we have seen that European Central Bank cut rate in June, bringing their deposit facility rate to 2.0%. Now, the US inflation expected for June also declined by 3%. So in GDP, so in and GDP now model is estimate for Q1, so for Q2 of 2025 GDP growth at 2.6%. So if this data is leading the market to believe that the Fed might cut interest rate faster, more significant than the previous thought, that would weigh on US dollar. Now, so this is also another one, the Eurozone economic data and the surprises. But let me quickly go down because of long this thing, the conclusion part of it. Then they said, in summary, why the US economy still exhibits strong underlying fundamental, higher growth, lower unemployment, historic higher interest rate. The recent bullish move on Euro USD suggests that the market participants have reversed their near-term expectation, likely regarding the piece of magnitudes of central bank rate adjustment or the improvement in Eurozone sentiment. So this is a common occurrences in dynamic world of forex trading. Now, what we learned from here, from this analysis is this. After getting all these facts and figures concerning the two comparisons of euro and United States, and their market also went up. So all these factors now, like the expectation, the long-term and short-term expectation, and the risk sentiment and global flows, and the economic data disappointment, are one of the things that influences the euro to go up. Does not mean that Eurozone economy is stronger than the United States. So we knew what happened when that tariff was imposed, that the European Central Bank went and hedged the economy. So all these factors is what you need as a trader who want to trade on Forex fundamental analysis. It will help you to balance your technical analysis together. Now, how do we apply it when it comes to trading? You see this note now, we could leverage on this note, and since the price of Euro USD is very high, we could leverage on that and have another position to place a sell on Euro USD, believing that since the economy of dollar is obviously strong, the dollar will definitely add a strong value, and this will give you profit in the future. And similarly, the same thing we could also apply using the USJPY, since the economy of dollar is also strong, like based on what we have on ground, that this market is most likely going to continuously to rise, and of course, we're already making profit on this one. We're already making a lot of profit. Can continuously to rise, and because of the economy is very much strong. And we have already said that before, that the way we see it, that US economy is going to rebound, and if it started rebounding, that the market will go up. And because of that, somebody can leverage on these two analyses now to have a strong hope to buy for a long time here, and obviously expect a long-term sell on this one. This what make you to be a profitable trader, and to also help you to be on a good trend position. Like if you know that this economy is better, you consider investing more on that currency more than when you invest on another currency that is not as strong as the one that you're investing in. I don't know if you have any question. I think fundamental is very boring, right?
No, you just have to learn
But you
it.
want it.
It's very boring. I know that one. People don't want to hear that one. But That's I want to make it as easy as ABC to try to give you a conclusion. What we are concluding here is that U.S. economy is strong based on the fact we have compared to all these other currencies. So now, and if it's very strong like that, and they are telling me that Euro, when I see on the chart that Euro USD has gone up, it means Euro has eaten up despite the economy being strong. That means there's also a strong hope on dollar to rebound. That's an analysis you can give. But here, a strong economy at a lower price is another good fit here, because here obviously what we see now, there's the chances of making more profit here using those analyses. Now, like I told you, the essence of fundamental is to help you to know direction of a market for a long time. We have achieved okay, let me make it from here. We started from here. We have achieved how many pips? We have achieved 350 pips or 360 pips so far since this week, using the same analysis of strong dollar coming up. And strong dollar cannot come up if there's no strong economy. So this will keep you going. You can keep going to maybe 700, even though you have small sell, you can still keep going because the economy is adding strength. And you can only know that using all these things that we have analyzed now. And these days, it's easy to learn because AI can help us analyze something as quick as possible, and we can be able to apply it into our trading instead of speculating. We can take a position and remain there. That's what I want. That's what we have to get home, go home with. Are we buying or we are selling? But why are we buying and why are we selling? Do you understand?
Yes.
So do you have any question?
Yes,
I'll
my
just-
question is that as
Okay.
the dollar now is getting more stronger, is it not going to affect the gold, buying of gold?
It may affect it, but not as much as we expected. Not as much as other currencies, no. The percentage of it is not too much. Like I told you, it's not the economy of US that will determine the strength of gold. Just that if dollar is high, some people will consider like may find the sourcing of dollar more higher for them. It will not make them not to buy that product. They will still buy it. So there's minor fundamentals and major fundamentals. Dollar being strong cannot extremely affect gold if there's demand on gold. They will still go for it. Do you understand what I mean now?
Yes, I understand because I hear that there is much demand on gold, like central bank and the China and the India.
Yes,
Yeah.
yes. Yeah, because of that, no matter what, it will still go up. So dollar being strong cannot be a strong factor for the gold price to crash because just demand will always surpass whatever thing they're talking about. Remember, these people, they have already placed those trades ahead of time. Yeah. Any other question? We have spent average 45 minutes, and I know that it's your sleeping time. Me, I'm not sleeping because I have my coffee, so I will be awake till maybe next couple of hours before the coffee leave my body, then I'll go to bed. So I think we have covered enough on this advanced fundamental. I will encourage you to watch the video over and over again. You'll be able to understand more. So when you want to watch the video, you ask yourself a question: why am I watching this thing? It will help you. So even if you are able to grab one or two things, you add it to one the one that you have known, then they can now like go in and expand on it. So let me give us assignment whether we want to tax our brain on something. You can use AI to do the assignment. So can I do it?
Yes, sir.
Sorry? So go and compare the economic strength of China and US. So we have US Japanese yuan and US Chinese yuan. So go and compare economic strength US and China. We can do it tomorrow. So let us know whether China is stronger than US. Then
Is it JPY?
no, China directly.
Okay.
Yeah. Because some brokers offer you China currency direct to dollar. Then you go and compare another one. compare this economic strength of US dollar and the South African rand. It's a very volatile currency. Using those key economic factors. Then after, assuming your broker offer those services, then we can be able to come out to know whether we can invest in them on one side against the other one. We're talking about identify trend. That's the essence of fundamental analysis. That's the essence. Technical is not that. Essence of fundamental is identify trend, especially for a long time. Knowing the economy that is stronger and the one that is weak. That's the essence of a fundamental analysis. So no matter how you're able to do it, if you're able to arrive at a figure that this particular economy is strong than this one, then you cannot be able to know if you are going to be buying that currency more than the other one. And those key factors is what is important, which is easier for us to know. Then if you want to do more, you could compare euro and Britain pound, because of these two currencies are still trading. I did my law degree on a single European market, so they are all doing trading with each other. So compare the two economic activities between the Eurozone and the Britain and British pound. So where we can apply it will be on Euro JBP. It's not on Euro USD or USD JBP USD. So all these two economic zone, let's see how the economy is performing. Then we can now know, okay, this economy can end up being stronger than this one. Then we could place a trade. If you don't want to use it on live trade, we can do it on demos. Some of us are on 6 months training. We can place a demo account and keep it for a long time, come back and check it for like after 2 months to know whether that thing works. If it works, you know that you have mastered that particular strategy. Do you understand?
Yes, sir.
Yes.
So I think we have to end here. I may not take another question because it's already late, so we can go to bed. And some of you that have not had a night meal can have a night meal. If you have anything you want to talk to us, I may personally be available on our chat till 2 hours time. I don't know if our chat assistant is still there, or then I can be able to also chat with you because I'm not sleeping for now. I wish you all the best now. I think this course is a very important one. It's recorded. We'll make it available for you in the future.
Okay,
So,
sir. Thank you.
do have a wonderful night, all of you.
Good night, sir.
Thank you.
Yes, sir. Good night, sir.